Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because we're on the verge of finding out whether global liquidity will increase over the next few weeks and Bitcoin has just been front running that move, or if global liquidity is about to start plummeting and Bitcoin has only been able to ignore that because of all of the excitement around the election outcome. And now the main driver of global liquidity is the strength of the US dollar, since it is the world reserve currency, and we're now officially closing weekly candles within our risk-off region, which has caused Bitcoin many problems in the past. It caused Bitcoin to capitulate in July of 2022 when we first broke above that level. When we traded into that region towards the end of summer 2023, we saw Bitcoin sell off as we entered that region. And now here we are once again with the dollar index back above the pivotal 107 region. And Bitcoin has been able to ignore it up to this point. But if the dollar doesn't roll over soon, I don't think Bitcoin will be able to ignore it much longer. And Bitcoin has been able to ignore strength in the dollar historically during shorter time frames, like what we saw in October and September of 2023, and also what we saw towards the top in November of 2021. But Bitcoin's huge mania phases have required prolonged drops in the dollar, and that's also when we saw the incredible alt seasons of 2017 and 2021 as well. So we have to ask ourselves, is this just some temporary short-term relief in altcoins, or is this the beginning of an alt season? And if we look at what's happening with global liquidity, as the Fed continues decreasing its balance sheet via quantitative tightening, this is definitely the main thing to monitor over the next few weeks, because for the first time this cycle, the market is only pricing in 2 rate cuts over the next 12 months. And this is why the dollar index has been so strong. So it's hard for me to imagine the Fed announcing quantitative easing in December when the market is only pricing in 2 Fed rate cuts. And now the reason we're seeing less and less rate cuts priced in is because inflation is remaining stubborn. CPI doesn't look too bad and it is close to the Fed's target. But if you look at core CPI, which tends to move a lot slower, it's still going sideways and even slightly higher, above 3%, which is way above the Fed's target. And when you combine that with a low unemployment rate, which yes, it has been slowly increasing recently, but it's still way below historical levels and well below recession start averages, I think it's going to be very hard for the Fed to have the excuse to do massive rate cuts like the market has been anticipating over the past few months. And if we look at some of our leading indicators for the labor market, initial jobless claims is still quite low, especially compared to recession start averages. The number of unemployed with continuing jobless claims is also quite low. We're also seeing a slowdown in job creation, but we haven't seen that turn negative quite yet, which is a historical warning sign of recessions and weakness. So we haven't seen that fall off a cliff either. And growth is still positive, thanks to the massive deficits being run by the federal government, which has essentially been running recessionary deficits, even though the economy is not in a recession. And we have the S&P 500 trading at all-time highs around 6,000, and we have Bitcoin trading above 90,000, all of which are not things you would expect to see in a tight liquidity scenario. And with that backdrop, it's really hard for me to find an excuse for why the Federal Reserve would need to cut rates more aggressively or much less start QE anytime soon, which is not the ideal backdrop for risk assets. And this is definitely what I'm going to be monitoring over the next few weeks to see if we are going to see that reversal in global liquidity or if it's going to be going down continuously. And of course, we'll monitor this by seeing the price action on the US dollar index and whether it continues grinding higher here or rolls over in the near future. Now, I know talking about caution and what could be around the corner is annoying when everybody is euphoric and everybody's celebrating huge green candles and saying this is just the beginning of the rally. You can see that in the market sentiment, with sentiment being in extreme greed for almost 10 days now. You see leverage more than double what it was in the April 2021 and November 2021 peaks. But we have to remember that when everything looks perfect, that's the time to pay attention because we are seeing profit taking by long-term holders. And yes, the ETFs have been able to absorb a lot of that profit taking for now, but we'll see how long that's going to continue. And we're going to watch very closely to see when MicroStrategy deploys this $3 billion they just raised. And if I were Michael Saylor and I had $3 billion to deploy into Bitcoin, I would do it Sunday evening going into the weekly close. And I would try to get the weekly candle to close above 100K to trigger that FOMO breakout going into tomorrow's open. But we'll monitor tonight's price action and see what happens going into the weekly close. So for now, based on current price structure, I have to expect Bitcoin to grind higher in the short term, but the possibility of a pullback does increase each and every day that we find ourselves with extreme greed and with global liquidity going down. So we'll continue to monitor it and continue to be open to multiple outcomes. And I'm still open to various cycle scenarios. I do think the short cycle scenario is most likely after some consolidation over the next few weeks, but I'm open to the standard 4-year cycle playing out, even though I think way too many people are expecting it this time around. And we always have to be open to the broken cycle scenario where everybody gets blindsided because of something breaking in macro. But for now, we haven't really had enough price action on the weekly time frame to come up with any ranges or any signs of bearish concerns in the medium term. So we'll just continue to monitor these weekly closes and see what type of price action develops. But as of right now, this is still a breakout to the upside that we've been enjoying over the past few weeks. And I have to talk about Tether dominance. I was seeing a ton of posts on Twitter and YouTube about the trend line breaking, and this is the beginning of alt season, and you are not going to believe how high prices are going to go. But how funny would it be if this ends up being a wick like we've seen previously, and we end up getting a bounce on this trend line as Bitcoin consolidates? We've been seeing huge increases in Tether supply over the past month, so it wouldn't surprise me if we got a bounce on this trend line once again. But like Bitcoin, we're going to have to wait for the weekly close and see if we close at this level and confirm a wick below the trend line, or if we're going to close below it this evening. And as for my portfolio, you guys should be familiar with my strategy by now. I took some very small profits off the table on my 3 main holdings again. I don't think it's a useful strategy to try and time pullbacks perfectly or try and time the cycle top perfectly. I just like to lock in very small profits each and every week, as long as we're seeing these huge $10,000 candles for Bitcoin and we're seeing extreme greed for extended periods of time, and Bitcoin is trading in a region I laid out almost 6 months ago, where I told myself that Bitcoin above 90K is quite expensive in the short term, especially when you consider that we've been accumulating below 30,000 and below 50,000. But then that's just a strategy that makes sense for me for my situation. I'm sure it doesn't make sense for a lot of you, but I just want to share that on here because nobody talks about taking profits in this market. Everybody just holds hands and prays for higher prices. And then as soon as there's a correction, everybody just panics and has no idea what to do, like a deer in headlights. And we have seen a bit of a rollover on Solana, Bitcoin, and Ethereum going into this weekly close, so we'll see what next week has in store. Ethereum's price action looks okay. I don't love these wicks to the upside, but Ethereum's price action is likely going to depend on what Bitcoin decides to do. We're still trying to come up with all of these cool sounding narratives to get price to go higher, but it hasn't worked quite yet. So I guess we're going to have to wait and see if hash-based zero-knowledge tech can quantum-proof Ethereum and save our heavy Ethereum position. As for Solana, obviously this one has had incredible momentum over the past few weeks. I don't love this wick above the previous all-time high as of right now, but it can still be saved between now and the weekly close. So we'll see what happens between now and then. But looking forward, Bitcoin's Q4 volatility played out exactly as we expected. This has been one of the best Novembers Bitcoin has ever had. And history would tell us that December would continue that trend, but maybe not to the same degree as November. But as we look forward in the longer term, we're still seeing exponential debt increases from governments around the world, and that debt has to get monetized eventually. So we remain cautiously optimistic on risk assets like the S&P 500 in the long term and Bitcoin in the long term as well. And it's still hard to believe that Bitcoin is trading above $90,000 when just 2 years ago around this time FTX was collapsing and everybody was worried that the industry was done for. But as always, let me know what you expect. Is Bitcoin just front running the upcoming global liquidity increase, or is global liquidity going to keep going down and Bitcoin won't be able to ignore it for much longer? Would love to know what you expect. As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.